Hello, everybody, and welcome. As we like to do every week, we like to take a look at the past week's market activity and then, of course, bounce around the market and look for something to trade. Well, I was a broken record for months and months and months as the market just continued to go up and up and up. But over the last few weeks now, look at this. You've seen quite a bit of movement up and down, up and down. And with that, volatility is starting to increase a bit. So the market, whatever's going on, and when nobody knows why things happen or what causes them, you can come up with your own assumptions, but in the end, nobody really knows why things move the way they do. But it's been moving. So that's good for us as traders because we like volatility. Volatility is starting to kind of go up. And again, as volatility-based traders, this is kind of what we're looking for. So this is the S&P 500. Again, if we go to the QQQs, which is the NASDAQ, it's always going to be a very similar picture. You can see this seems like a bit more of a wild ride, but again, very similar picture. We made a trade here last week because this volatility was spiking. You can see it's much higher than SPY. So we made a trade in the Qs last week. And finally, the Russell, which is the small cap stocks, is the only one that seems a little bit different. Look at this one. This one seems to be kind of breaking down a bit more and going like well below its lows. It's kind of back to where it was around September, let's say late August, early September. So this thing has lost basically the last 2 months or 3 months of value, and it's kind of where it was 2 or 3 months ago. And again, volatility is pretty high. So what are we going to trade this week? Well, we're going to have a little fun as contrarians. This is Boeing, and you can see this was earnings, and it took a massive drop after earnings. And now, over the last week, it's kind of seemed to be bottoming out around here. And again, these are always just my assumptions. I know nothing. And one of the important lessons to learn as a trader is nobody knows anything. No matter what you hear, no matter what the talking heads say on TV, no matter what your friends tell you is like, get in here, get in there. In the end, nobody knows anything or they'd all be trillionaires, right? If everybody knew the future, they would just make a bet and they'd be done. So it's always an assumption. And in my case, as a contrarian, what that means is I always kind of go against the grain. So this thing has been tanking for months, and it seems to have leveled off around here. Volatility is low now. So my play, because of my assumption as a contrarian, my play is I think over the next few weeks, hopefully this thing will kind of bottom out and start to bounce back up. I could be totally wrong. If you're a trend trader, you're going to bet it's going to keep going down and you'll make the trade going down. As a contrarian, I'm going the other way. And this is exactly why there are markets, because people have different assumptions and different opinions. So, if I want to make this trade based on my assumption, what am I going to do? Well, in this case, volatility is very low. Oops. Volatility is very low. You can see it's bottomed out. It's kind of as low as it's been kind of for the whole year. So that means I'm going to look to buy something, buy a vertical. In this case, I'm going to buy a call vertical because I believe it's going up. Volatility is low. I believe it's going to bounce from here. Long call vertical is what I'm going to make a trade in. So if I go to the trade page, now normally I'd go right here to 47 days because tomorrow will be 46. But I want to show you why I'm not going to do that. And that's because of liquidity. Look at the bid-ask spread between these two, because this is kind of where I'm going to be trading. It's like $1 to $2 wide. Over here, $1 to $2 wide. If I go to the 33 days, which is the monthly expiration cycle, which is why it's not in yellow, this is the most traded. Monthly expirations are always traded much more than weeklies or quarterlies. So if I go here and look at the same, right here, you'll see, well, look at that. It's what a difference, right? Instead of $2, it's 50 cents or it's 10 cents right here. Over here, similar story, 20, 30, 40 cents. And again, the market isn't even open now, so this should become tighter when the market opens. So even though I'd like more time right here, I can't because these are just not liquid enough. I'm going to be forced to go in a shorter time frame. And actually, if I want to, because 60 days is my window as well, I could choose to do these as well because these are also 10, 20, 30 cents apart. And in this case, because I think this is a longer term play, I'm looking to make this trade and hopefully 30 days. I don't know what can happen in 30 days. It's the holidays. I'd rather have more time. I'm going to look to try and make this trade here in the 60-day one because that'll fit our window. Tomorrow this will be 60. Between 30 and 60 is our window. This will be 32. So it's near the low end. This is near the high end. I'd rather have more time. So how do I make that trade? Well, I always go right below the stock price. So 190 in this case is right below. And then I go right above to sell the call above. So if I make that trade, if I do a vertical, so I'm buying the 190, selling the 195, I want to be somewhere in the neighborhood of 45 to 55 cents per dollar in width. So in this case, it's 275. And again, the market is closed. This is right near, isn't going to be super accurate for tomorrow. So if I'm looking to do 55 cents and it's $5 wide, I'm looking to buy this for no more than around 275. And again, that's right where we're at. And also, when you buy verticals, I'm much more loose on the rules. 45 to 55 is what I shoot for, but tomorrow, unlike selling verticals, if it's 56, I can decide to do it if I want to. If it's 60, I might be okay with that. Buying verticals is much looser when it comes to rules. Selling, we stick to the rules tightly. So this will be our trade for tomorrow. Assuming everything stays where it is in BA and we open up right here, we're going to buy the 190 call, sell the 195 call, look to pay no more than about 275, but if it's 280, whatever, totally fine. That's totally your call at that point. So that is our trade in BA. As a contrarian with low volatility, we're going to be buying a call vertical. Hello everybody, Cal here with an ancient Chinese proverb which I'm sure you have all heard before. Give a man a fish, you feed him for a day. Teach a man to fish and you feed him for a lifetime. Why am I telling you this? Because most services out there just give you a fish. They tell you, oh, make this trade, I made this much money, I made millions of dollars, do this, do this, do this. That's not my goal. My goal is to teach you to fish for a lifetime. I want to teach you the skill of trading so you can go out and make as much money as you want to on your own. And the best way I've come about to do that, at least for me, is to basically set up an alert system where you can watch me trade in real time. You'll get texts or emails directly to you in real time of the trades I make every week. I do 2 to 3 trades a week, so it's going to tell you everything you need to know about the trade, why I did it, how I did it, what I did as far as specifics, and then you're also going to get the closing alerts when I close them for the maximum profit potential on these trades. Like, how do I close these trades? Why do I close them? To get the best profit potential over time. And I want you to do it without any risk, which is why I've set this up for $1 for the first month. You'll get my option income alerts for the first month for only $1, and you can cancel anytime, so there's no risk on this one. You're risking $1 to see if you can turn that knowledge or learn to fish. You'll use this code, MakeB1. If you want more, we have the Option Pro Alert, which is the exact same alert, but it also gives you access to every course and webinar I've ever made. It's a 13-course bundle, obviously thousands of dollars in knowledge. Again, you can do this using this code, and this is only $19 for the first month. And again, you can cancel this one at any time. So again, a risk-free attempt to learn and see if it's something you want to do. Here they are right here. If you want to go do it, you can go to sharpertrades.com, go to the products page. These two will pop up. You can type in these codes down here, or you can just go directly to this link right here and it'll build the code in itself, or the attachment I have at Udemy along with this little video. So again, my goal is to teach you to fish. I can't think of a better way to do that than to trade side by side with me in real time. Hopefully you jump on this opportunity. Hope to see you soon. Take care.